Netflix added 10 million net new global subscribers last quarter, beating expectations as viewers hunkered down amid a pandemic. The company's current third-quarter forecast disappointed, however, knocking the stock down more than 11% in after-hours trading. In major news, Chief Content Officer Ted Sarandos was named co-CEO alongside founder and chairman Reed Hastings. Netflix net subscriber adds were above expectations of 8.26 million for the second quarter, where it ended at 192.95 total subs. But the company said it only expects to add 2.5 million net new subscribers in the third quarter, a significant slowdown compared with previous periods, and even compared with last year when it brought in 6.8 million new subscribers in the same period. It's half of what Wall Street expected. Related story: too lazy to cancel Netflix? The company will now just stop billing you. In his letter to shareholders that accompanies each earnings report, Hastings called huge growth in the first half of the year, when it added a total of 26 million net new subscribers, as a pull forward of our underlying adoption, and indicated that's not realistically sustainable moving into the second half. The 26 million paid memberships added in the first half of 2020 were nearly on par with the 28 million for all of 2019. However, as we expected, growth is slowing as consumers get through the initial shock of COVID and social restrictions, Hastings said. As we navigate these turbulent circumstances, we're focused on our members by continuing to improve the quality of our service and bringing new films and shows to people's screens. The company's stock has been among the best performers in the entertainment and media space as the first, biggest, best-stocked and most international of streamers despite a raft of new competitors. Its shares slipped this week, however, on jitters that the stock may have gotten too high, and Wall Street punished it today on the numbers. The company has a history of volatile market moves when it reports its hotly anticipated numbers. Netflix reported earnings per share of $1.59, below Wall Street analyst consensus of $1.81 but way up from 60 cents the year before. Net profit jumped to $720 million from $271 million. Revenue of $6.15 billion beat expectations of $6.08 billion and was up 25% from the year-earlier quarter. Operating income nearly doubled to $1.34 billion. A key metric, free cash flow, was nearly $900 million compared with a negative $594 million the year before. Improving FCF is being driven in part as the company digests its big move into original programming that requires more cash up front versus licensed content. It also said the COVID-19 related pause in production has pushed cash spending on content into the second half of the year. Netflix said it ended the second quarter with more than $7 billion of cash and equivalents on its balance sheet.